If you join us in the Facebook group, you'll see questions like Shirley's. Is it worth making additional loan repayments if you plan to sell and purchase a different property in the next 3 years? So let's just do an assumption here. We'll assume, just making numbers up here, $3,000 is Shirley's monthly mortgage for, shats and gaggles. And Shirley's got a spare $1,000 a month, which we'll call the additional. John and Rach are here from the This Is Property podcast. Welcome, guys.
Pleasure.
What are we saying to Shirley?
If we were swapping Shirley out for Glen, as in, I would say, make extra payments because then we can't go and spend the money. If Shirley's, it's forced savings to make extra payments, and when you sell the property, which she's planning to do, she's going to get that money back. So I don't think there's any real downside to it. It's in the next 3 years, so she's not putting it away to never to access for another 10 years. So I can't see an issue with it. However, it could sit in the offset account and essentially doing the same thing for her. Up to her. Like, it's a good problem to have that she's putting extra money into a home loan. Rachel?
Yeah, I think I would just want to ask Shirley a few questions. And those questions might be, are you definitely going to sell that property? And what are you going to do when you sell it? What's your plan after that? I think a lot of people think they're going to do one thing and then their mind might change. So if I wasn't 100% sure of what I was going to do, I would open a separate offset account just for, I would call it mortgage repayment, and put all of my extra funds into that so you're not paying interest on it. However, if Shirley were to make a change of mind in 2 years' time and decide to rent that property out, she's not doing anything that will hinder things for her down the track. So I think offset offers flexibility, but opening a separate offset that she can't touch or she doesn't use day to day separates it from her extra money.
Because we've got an in-house mortgage broker here, as in on this table, most banks charging for an offset account?
Well, generally, when you get a package, and a lot of people with certain loans have a package, a lot of the banks have multiple offset accounts that you can have. And even some of the banks that were only doing singular have caught up with the rest of them and are doing multiple offset accounts. So every major bank now has multiple offset accounts.
So she says that she is planning to sell. Strictly speaking, if it was a vanilla mortgage without a redraw, without an offset, and she had the extra $1,000 a month free, and she did have an emergency fund and a good cash flow system, because I think sometimes we do dig in and make assumptions. The black and white is you put that money in there, it will reduce the debt, aka add to equity. You'll pay a little bit less interest throughout the next 3 years. When you sell, it will all come out in the wash. You've paid it down, you owe less, no harm doing that.
Yeah.
And then that's kind of the question, well, what is your current mortgage product? It could be a redraw, and if someone did have a redraw mortgage and you wanted to change products to a mortgage with an offset, not that I don't think you would, but that's the whole credit application, is it? And
sometimes it's just a change of product. It doesn't need to be a whole credit thing to change.
Yeah,
just
okay.
if it's, you might need to do it to change, but sometimes you can just add an offset. But it would be only...
But you can't add an offset to a redraw mortgage, can you?
Well, you can. So you can
Right.
have, there can be a mortgage with a redraw that also has offset. So if
Yeah.
I look at my mortgage right now, I have two things, redraw, and I have multiple offsets. The money that I want to pay additional on my home loan, I put into redraw.
Yeah.
I never use redraw. I never take it out. But any money that I have saved for other things that aren't for my mortgage, I put in offset.
Yeah.
Oh, actually, my mortgage is it will say I'm in advance payment.
That would
so
be
that's basically redraw, yeah.
And some people, I've got clients...
Because you can only redraw the extra that you've put in.
That's right. There's
Yep.
some clients that I encourage to turn off redraw. If you're somebody who sees money and likes
Spends
to take it, I would turn off redraw.
Yeah.
But when I said that question, that's only a small percentage of people that may decide to make that an investment. Unless that question is a yes. If you're going to sell this property and never going to rent it out, absolutely smash that home loan down.
Yeah, I like the part about maybe I do change my mind in 12 months and I don't want to sell anymore and you've paid it down and now I mean, you can get it back out as equity, but you've lost the cash component.
And there could be, situations like there's a reason why it's 3 years. Okay. It could be we don't know anything, but sorry, I'm just tangled here. It could be kids or going to finish primary school when moving. It could be I'm going to finish this project at work or some training, or in 3 years this is happening. Or it could just be, I reckon in 3 years I'll be done here. I would say if it is the latter and it is thinking 3 years, I reckon I'm done here, and can you set your financial position up to pounce earlier if an opportunity comes, if the shoe fits?
Yeah, good call. Can you do this in 12 months? Can you do it now? Like, why are we waiting 3 years?
Yeah, and it could be a variety of things where it's like, it's a school zone thing. And so, anyway, or it could be, we don't know, but I don't know. I just think, one, there's no negative of paying extra on your mortgage.
Broad stroke.
And I think that's the reason, like, in the Facebook groups and that, we get simple questions like this. And Shirley, I reckon she knows, is it worth doing it? But because we're in this thing, and, we jump on Answer a Question, have all these different scenarios, it could confuse the most basic thing.
Yeah.
And that's why I wanted to say it's okay to do that. You're not breaking anything.
I just think there's so much information and opinion and data out there that it makes us sometimes walk around like zombies.
Yeah.
Like, so much information, it's overload. I can't even think straight.
Yeah.
This podcast is brought to you by Sphere Home Loans, and disclosure here that Rachel is the founder and director of Sphere Home Loans. Rach, thanks for supporting everything we do here at Money, Money, Money. Hey, if you have not had your mortgage reviewed in at least 18 months, 2 years, or had a broker run their eyes over it, go back to your broker. If you don't have a broker and you went to the bank, get someone at Sphere to run their eyes over it. Would you say that? Every couple of years?
Absolutely. Yeah.
12 months.
This is not changing our mortgage every 10 minutes.
No.
This is just, we just want to make sure that everything's relative. And there's a question a bit later on in this episode. We're going to talk about how to negotiate on your mortgage, but we are pro mortgage broker here. And if you don't need a mortgage right now, you're not ready, I want you to remember Sphere Home Loans. If you know people that are looking for a mortgage broker, you can send them to Sphere Home Loans. Say that they are trusted by one of the biggest idiots in Australia, being me. They are trusted by me.
We had the privilege of going to headquarters last week.
We did.
Yeah.
And also, I think after the break, we might talk about how you guys saved the day.
Awesome, yes.
Remember that one?
Yes.
Let's get into it right now. Thanks, Sphere Home Loans. You're listening to Money, 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 or as the regulars like to call us, M3. Everything discussed on the podcast is general advice only, which I'm licensed to give, and details can be found in the show notes. My name's Glen James, former financial advisor, now podcaster. I host this show and a show called Retire Right. I've also got a book called The Quick Start Guide to Investing, which you can check out wherever good books are sold, or there's a link in the show notes. Otherwise, thanks so much for listening today. Now on with the show. Okay, remember, if you want to buy some books directly from us or some tote bags or shirts, we've got limited edition merch available. You can go to moneypodcast.com.au. There is a link in the show notes as well, maybe if we put it in. But moneypodcast.com.au. Click the store and you can wear a shirt like I wear on the podcast some days, tote bag like I use at Woolworths some days. Bushan. Car question. My current car has clocked 111,000 odd kilometres. Mitsubishi Eclipse Cross. No complaints. Absolutely love driving it. 100,000 Ks is nothing in this day and age. Thinking of selling it and getting a newer / upgraded model. Not sure if using some equity after the sale of the current car or a car loan or novated lease is the way to go. Not looking to buy brand new, thanks. What's your first reaction, Rach, to that question?
Don't borrow too much for a car.
What's your first reaction, John?
Abort mission.
Yeah, my first reaction is put car sales app away, get on with your life.
Yeah.
You've said you love the car, no complaints. I hired one in Queenstown, a hybrid one. It's a fantastic little car. 100,000 Ks is nothing. Can you, for the sake of Bushan's financial future, get on with your life and just reassess it in 12 months? Because we're not reading here, we're getting another 3 kids, so we need a 12-seat minivan, or the gearbox has crapped itself, or it's a lemon, or I'm now commuting and I need something a bit more commutable or something like that.
Yeah.
And I would say thinking of selling it and getting a newer / upgraded model, that's called a want. And you're allowed to do wants. But I wanted to talk about this question today because the power in money is to spend less on stuff that goes down in value and spend less on wants and more on investments for the future.
Totally. Yeah.
So
the word thinking about doing it, we just need to change to getting on with our life.
Now, we can use this as an intervention, and I'll do this. We'll date stamp it. This episode is going up on the 12th of August, 2025. It is my goal, because I'm selling the Volvo for a couple of reasons, and it is my goal to keep the Ranger as my daily, right? Because I'm like Bushan. I'm on car sales, I'm looking at, and I'm like, I'm going to get a new one.
The latest of love.
What I'm thinking, and I was thinking about this the other day, and this is the challenge, and maybe, Bushan, you can be my accountability buddy as well, and both of you, because we'll shake on it in a second. It is my goal, because I'm not above any of this wants and needs stuff. I don't want to say this because I do want a new car, but I'm going to say it. It is my goal, and you can keep me accountable. Maybe maybe we do this. If I don't do this, I got to pay $5,000 to a charity, $2,500 to a charity of your choice each or something like that. Okay?
Done. Yeah, this is the easiest 2.5 for a charity I've ever heard
It's coming
of.
to you, Friends with Dignity.
It is, and I'm reluctant to say this right now, but I'm going to use the Ranger as my daily and not upgrade my car, because the Ranger works fine, the Volvo works fine, until the upstairs office is complete and working, and it's after February next year.
So 7 months' time.
I'm still got to be driving the Ranger as my daily. I can only get a new car after February and after upstairs is done.
Have you seen that Ranger? It's about to fall apart.
It's a 2014 model that's got 160 Ks on it. It's awesome.
160 on the Ford.
I feel great that we can help some charities.
Yeah, no, look, Orange Sky Laundry, I've already got picked out.
Yeah.
This is a fantastic charity.
So if I buy a new car before then, I'll donate $2,500 to Orange Sky Laundry and
Friends with Dignity.
Friends with Dignity.
All right, well,
so
it's great that you're a giving person.
So there we go.
Anyway,
let's shake on it,
yeah.
Johnny. Let's shake on it.
Yeah, that is a done deal.
I regret that because I really want to buy a Touareg because it can tow the boat and will be nice to drive.
They're really nice too.
So Bushan,
shake on it with someone else.
Yeah, Bushan, we're not doing it, bro.
Shut the gate.
You are keeping that car. And the challenge out there to people is what wants in your financial life do you want that you can also put on hold? Because if I spend money investing in the business here and upstairs in the studio, that will make me money. Or if I buy a car tomorrow, that's just a want and will cost me money.
Having accountability buddy gives some weight too, doesn't it? So can we find someone that we can also shake on with? Because there's
John's going to send me, you both will be sending me links to car sales, look at this Touareg or something.
It's a deal that end of financial year cannot beat.
Yeah, that's right.
And I've been anyway, do you want to read John, do you want to read that from Sam?
Sam says, "Hi everyone. My partner and I are looking to buy our first property as an investment. It's about 600,000. Our plan is to capitalise on the capital growth and either sell it after 3 to 5 years or borrow against the growth to buy something else. We're trying to decide whether to do P&I loan or interest only, P&I being principal and interest, and would love some advice on what's the best option for our situation. For context, P&I would be 3,539 per month and 6.09% interest rate. Interest only would be 3,040 per month and 6.24% interest." Rachel.
You guys can sort that out for Sam.
Yeah, look, it depends on your own goal, and sometimes people do pay. I'm guessing this is your first property. It is your first property as an investment. A lot of people do pay principal and interest if they've got one property and it's their first investment. However, if your goal is to build a portfolio, I think the most effective way to do it is to set that up as interest-only repayments, set up an offset account underneath that property, and plough as much money as you can into that. And the reason for that is you can have the ability to take that money out and use it again. Where you can't, once you've paid it off that investment property, you can no longer, let's say you're buying a property for, 600,000, you're going to borrow 500,000. If you pay that 500,000 down to 400,000 over the next few years, which would be awesome, you can only ever have $400,000 tax deductible against that property moving forward. But if you put that 100,000 into an offset account, you'd only be paying interest on the 400,000 while that money is in offset, but you have the flexibility to take that 100 out and put it somewhere else. And that might be, you might be buying your own home down the track and you can take that 100 out and put it into your own home down the track. So I'm not saying everyone should only pay interest only. I'm just saying there is benefit to doing that if you are disciplined enough to put it in an offset account. John.
Pretty good summary, sister. Look, Sam, great position to be in. Partner and I just getting into first investment. Awesome. 3 to 5 years, we go and buy something else. I'm surmising that something else is going to be another investment.
Yep.
If it's our own home, different conversation. But if it's another investment, either way, I think I'm with you. Interest only, where we're saving. There's about $6,000 a year that we are saving by going interest only. $6,000 that we're putting aside into a savings account or wherever. Over 5 years, that's $30,000, if my math serves me correctly. $30,000 as a deposit on a next property. If our servicing's strong, 10% is $300,000. Potentially an extra $300,000 that we could buy using our $30,000 of cash that we've saved on this property.
Yeah.
Yeah.
Or if you're in a rent vesting situation, you're planning on buying maybe 2 or 3 investments and then buying your owner occ, you may get the capital growth in this property to be able to fund the next one completely, and you can leave that money in offset the whole time until you get that owner occupied down the track if equity and servicing serve you enough.
Yeah. I think generally speaking, rule of thumb for me personally has always been P&I on owner home, interest only on investment. I know we've rebutted back and forth over the journey, Glenn, but that's our thoughts.
Can I give you just one example of where I've recently where I said to somebody to not pay interest only on an investment property? So it was a client that came through and they were putting a 10% deposit down. So it was a 90% LVR and the interest only rate would have been 7%. And the P&I rate was going to be 6.2.
So why such a discrepancy?
Big difference. At 90%, sometimes the risk for the bank interest only is a little bit more. So what we did is we put it onto principal and interest, took the lower rate. They actually did a few cosmetic improvements. We had it revalued and then it was 80%, and then we flicked it to interest only at 6.3%.
Okay, so is the risk the bank or the client? Like, why was the interest rate so high?
The risk is that the client at 90% interest only was deemed a higher risk to the bank.
But it's never like 0.7, 0.8% difference.
It was at 90%. In this particular circumstance, it was.
Yeah.
It was such a big difference of rate.
Yeah, I know, but when you say circumstance, is it that client's circumstance, or is it bank's policy
It's just
at the
bank
time?
policy at 90% LVR. We're
Right.
going to whack you so much more if you want to pay interest
Yeah,
only.
so that's a
so there
different
are
story.
outliers to it. There's sometimes we do say principal and interest, but generally in this case,
Yeah.
I would personally lean towards interest only.
Yeah, like if we're talking $50 a month difference here, no brainer, go P&I. But
600K investment property that Sam's looking to buy. Where am I buying an investment property for 600K at the moment that's good quality in Australia?
you sound like some online forum. An open-ended question like that, you've got 1,000 different responses.
If I wanted to buy a freehold property for 600K,
Yeah, so
where am I going?
if it's a freehold, as in I've got my own land, Torrens title or green title in WA, it's got to be some regional location.
Yep.
Yeah, so it's generally not a capital city. Maybe Darwin, Hobart are probably the only two left.
Right. Because
and-
Darwin did nothing for a million years.
Yeah, and it's quite hot at the minute, Darwin,
Right.
like physically, and the property market is going well, but it has its speculation about it. So, yeah, why the question?
I'm going again, baby.
There's no regional New South Wales for 600?
Yeah, heaps.
Oh, okay.
Yeah. What did I say?
Oh, I
Yeah.
thought,
You said-
Regional.
Yeah.
Regional.
And then you
anywhere
said
around
maybe
the country,
Hobart,
and then capital
maybe.
city, we've got Hobart.
sorry, threw me
yeah,
with Darwin.
Yeah. No, I'm potentially might want to just pick up a little one like that.
Yeah, well, I'll send you a clarity call link and we'll
Yeah,
have a
let's
chat,
go.
right?
Let's go, baby.
But yeah, look, there's plenty of options out there. Like we see good real estate, dare I say it, 400 to 500K. Like people get this perception that, because it's $1 million in my city, that's all there is out there. Like there is, and when you're talking 10% interest only, like 10% deposit and then interest only loans, like you're in for 70 grand total costs. I guess we can get that done pretty quickly.
Yeah, so for me, you know how we did the years, money in your 20s, 30s, 40s, and then on retire, we did 50s, 60s, and 70s. If you want those on our YouTube, we've actually got a playlist called Money by Decades or something. But I was really, when we did the one for my decade, 30s,
Just.
no, when we did, like, I was personally challenged, and I'm like, what am I doing with my life? And because I guess I did have financial goals like building a studio and all that, and that's done now. So I'm thinking, what can I do for the years to come? And I do want to buy a property at some stage in or around Newcastle. And it might not be for 5 or 6 years. So what I'm thinking is, well, I need to turn everything up again, potentially go again, because when I do buy a PPOR, I'll be selling some type of assets to put into it.
Through fear of turning this into a clarity call, why wouldn't you buy something in Newcastle now?
And just put a tenant in there.
Yeah.
I haven't even thought about that. Giddy
No.
up, baby.
the
but
clock
I will,
is ticking.
Yeah, it is very much ticking. Yeah,
and well, I was
especially
like,
in
I was
places
even
like
thinking,
Newcastle.
because I've got the little pockets where I want to live. Maybe I should have a clarity call with you.
Let's do
I'll
it.
pay you.
We'll do it live.
I'll
Can we
pay
do
you.
it
No, I
live
don't
on
want,
a...
I don't want your
Oh.
money.
Yeah, maybe. I just don't want everyone to know my personal financial situation.
Okay.
But I will say, in line with me using one car and not buying a new car, and over the last year of, I guess, being on the ADHD medication and being more aware of my proclivities to spend every living cent, I'm now a bit more measured and considered, and I'm not spending every living cent. Little things like, for the office here, the old Glen would have just went and bought a $4,000 Giotto coffee machine. You know, like the one at Maddie's office.
Yeah, they're good.
But I'm like, you know what? I don't need to spend that. A $600 Sunbeam.
Fine.
It's fine.
Aldi beans.
Aldi beans. They're okay. Vary it in milk. So I am being more measured and considered. So I'm actually moving, because, you know, you made that comment before about the P&I on it. I'm actually moving all my loans to IO at the moment.
Wow.
Because
Nice work.
I'm going to go again and now get really strategic about my lifestyle goals because, I was rattled myself when we did those age episodes.
Yeah.
I'm like, what am I doing here? Got to stop flapping about. But relatively, I earn a good living and all that stuff. But relatively for me, I need to get more strategic. So that's why now that extra P&I that I was paying into those mortgages, I'm going to divert potentially into another property or something like that.
All right.
We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
Okay, we asked you in the Facebook group, what's something you'll never, ever do with your money?
Ebony, apparently spend responsibly.
Yeah, what up?
Alicia, buy a timeshare.
Ooh. Kel, gamble and loan large sums to friends and family. I've done both of them.
Daniel, drugs, credit cards a close second. We'll never do again anyway.
Caitlin, never going to use any buy now, pay later or buying things on Temu. Proud that I never have. I love that, Caitlin.
Joe said MLMs. And I think Joe is in the pickleball social group that I go to.
Oh, there you go. Might be, there you go. Samir, buy a brand new car.
Yes, on topic.
Chat to Glen.
Sandy, spend it. My husband is Scottish.
Yeah.
Spend it. My husband is Scottish.
Maddie, be able to swim in it like Scrooge McDuck.
You'll never do with your money.
Dev says spend on alcohol or cigarettes.
Hey, if you're into money podcasts and people not fast and loose like me, Dev Raga has a podcast called Dev Raga Personal Finance. He's a doctor in Melbourne. He does a lot for medical professionals. Rach, you've been on his show. We probably don't advertise it enough, but we produce that podcast for Dev. And is that my phone ringing? No. And he's really good, really good. And Sophia James, no relation, buy a designer bag. Have you bought a designer bag before, Rach?
I have.
What's the most you've spent on a bag?
I don't want to disclose that. I'm ashamed.
Okay, everyone.
Four figures.
That means it's over $20,000.
No, nothing.
Okay.
I'm pretty conservative. It's just something I thought I'd never do, and I did do it. And I did it using points of my card. So I justified it saying, "Oh, that's my points," but I could have used that in a lot.
Points,
I could have used that a lot more effective ways. But I'm not someone who would buy that sort of thing generally. No
points. They're only good for seats on planes.
Yeah.
I should have bought seats on planes rather than this bag, but I do like it.
What brand? Yeah.
Because as long as you're using it,
She's just so humble. Let's wrap this up with a question from Rebecca. Mortgage rates question here. Ooh, if only we had a broker on the chat. Those with a PPOR and a healthy equity balance, how well were you able to negotiate your refinance? Can't speak. Not just a new rate, but perks like cashbacks, offset accounts, and redraws. We are LVR sub 60% and are due to come off 1.99% rate mid next year. Gosh, Rebecca, do you want anything else in this life? I know we were very lucky and had an awesome broker. The projected rate is somewhere in the high five. So, look, what do you say to someone about negotiating rates in general?
Look, I would say to Rebecca, you have an awesome broker. Go to your broker and ask them to sort that out. That is their job. If somebody does that every day, they tend to get very good at it.
Yeah.
And I would just let them do that job. If you've got, he's obviously done it, or she has done a great job for you. Go back and get them to work out what's important to you now in this stage of life and what you're going to have moving forward. And it may not need, my big caveat on this is it doesn't need to be a refinance. A lot of the time it's a renegotiation. So that broker might be able to go to the bank that you're with and it's rolling off 199. It might be going to 54. But that particular bank might be offering new to bank customers 5.2, just using an example. And that broker might be able to get you the new to bank rate without you having to do anything.
This is interesting. Like, this is mid next year. I love that she's thinking about it, but I want you to just get on with your life, Rebecca, until 2 months before that, because a lot can change. There could be different products. There could be different rates. Interest rates will be down more. It might not be high five. I think you're right. Mid next year with an LVR sub 60, you're getting the cheapest rate that you'll get.
Yeah.
So, yeah, if you had this template that says this is absolutely the lowest rate that you've been offered because you're an A-grade citizen in terms of high incomes, low LVRs, like what's out there? What would your template be? Would it be LVR below 60?
Yeah, there's some banks sub 60 that just, so some banks do different stuff.
Yeah.
So some banks will price really aggressively sub 60, but some banks it's not. They will give better pricing for an 80% LVR at 4 million than another
Right.
bank will at 60% 4 million.
Gotcha.
So it depends on the bank, and your broker will be versed and know who's got the appetite for what at the time.
Yeah. Can you turn your microphone?
Yeah, sorry, John. I always go off at him.
Another question, since we've got a broker here, cashbacks. Everyone loves a cashback. I haven't heard them being bandied around as much lately. What's
Yeah.
the story with cashbacks?
I thought the cashbacks really encouraged people to refinance when they probably didn't need to.
Yeah.
I do see cashbacks. We had a meeting on Tuesday in the team, and there was still a lot of cashbacks kicking around.
Were
People
there?
are still definitely getting cashbacks, and when comparisons are being put out, the cashback is still appealing to some people. Now, if you can get as good a rate at this bank and then get the cashback,
As well.
why would you not do it? But I don't know if I would refinance for a cashback.
And example of cashback, are we talking a couple of grand? Are we talking
Yeah,
5
a couple of grand.
Yeah.
I mean, it's just speak with your broker. If you don't have a broker and you've got a mortgage direct with the bank and you haven't really looked at the rate, I generally say call up and ask to speak to the pricing team or the retention team.
Yep.
So skip the queue because they've got a team that just focuses on retention or keeping clients, and say, look, I'm looking around at our options at the moment. Is there a better rate that you can do? They might ask for some evidence of a better rate. They might match it. And you can still do that if you have a broker.
Yeah.
Because they're, I think once with a lender that I was with, I called them myself and I think I just wanted to try this. And I'm like, I want a better rate. And the reason it worked more with me because I don't think the broker got a good at. I think what it is, Rach, and you would know better, at different times in the market and different lenders will have a focus on different things.
So true.
And I think at this time, and I think it was St. George at the time, they were just so hungry to keep business. So the broker put the request in and they said no. So I called and I'm like, hey, I'm emailing you a letterhead from my broker that says they're about to place me with this other lender at this rate, and they matched it.
Yep.
So, go to your broker first, but if you don't have a broker, call and go to the pricing team or...
That's right.
Yeah.
And some banks are great. Some banks really embrace brokers and work really well with us post-settlement. So they allow us to reprice. There's some banks that aren't as great dealing with brokers post-settlement. I've had to say to a client, listen, this particular bank is going to give you a better rate, but they're not going to give it to me. So you need to call and say this. And I hate doing that. It really bothers me. It's not a lot of lenders. There's a few, but there are some that deal better with the client than the broker, and your broker can coach you in that.
Yeah.
Side note for Rebecca, I know she'll be all over this, but we're going to have a higher rate, and it's going to be quite a jump, isn't it? 1.99 to something
Double.
with a 5 in front
Bit
of
over
it.
double rate.
So we're already preparing for that, and we're putting that money aside as though we're living it already, like moving out of home, like changing incomes, blah, blah, blah. That's what we're doing.
Yeah.
Yeah.
Finally, yeah, sure, John, when I was listening, but
Sorry, John.
finally,
I'm out.
finally. A few weeks ago now, we one of our listeners, and this just goes to show you when you have a good quality team and broker, when things go a little bit sideways, how you can be royally effed. But if you've got a broker that is very capable, well-known in bank land, not all the time, but sometimes they can make amazing things happen. So do you want me to just set the scene from my point of view?
Yeah, great.
So I'll always, if you ever want to give me any type of feedback, please email the team. No, just don't be a whinging idiot because, life happens. But if there's something that you think I should know, just flick me an email because I want to know if I referred you to John and one of John's employees stole 20 grand from you. Like, I'd like to know that. You know what I mean? If John misses an appointment, just life happens. Don't let me know about that. Like, just stuff like that, right? It happened yesterday, didn't it?
Didn't miss it, just ran late.
Yeah.
Yeah.
Carly messaged me. I'm like, I don't care. He's probably busy. Chill out. Anyway.
Got there.
Um,
I felt like a doctor running late for
I know.
next
And,
appointment.
that's right. Can we just have some grace here? Anyway, so old mate got an email. Hey, you referred me to Sphere. This happened, blah, blah, blah. And I don't need to get into the weeds of personal financial situations. And I think I said to him, hey, it sounds like it's not a broker problem. It sounds like it's a bank issue. And I can guarantee that, anyway, so I think I text you. You were going away the next day or something to Spain for a holiday.
Yeah.
And your team was already on it.
Yeah.
So Nathan was on it, you were on it. So what was the issue? And this is a trap, potentially.
Yeah, so I think it's really important for people to note. So this particular case, it was something to do with the government, the 5% guarantee scheme. So that we talk about it, there hasn't been a shortage of spots for a long time. But at the end of the financial year, there was a shortage of spots and they ran out. And banks, when they give approvals, there's all these caveats into their approvals saying subject to, this government incentive being approved. Now, I think it was right near the end of financial year.
So they got pre-approval with the bank.
And they found a property and then it runs to formal approval. I think it was a couple of days before end of financial year and the spots ran out. But and I wouldn't even say it was a bank problem. It was the people like over here in the government weren't telling the banks that spots were about to run dry. So the bank didn't even know spots are about to run dry. They've issued all these people formal approvals. A lot of people got caught up in this. And then the spots ran dry. And it sounds like an easy fix. So they go, you've just got to reapply in the new financial year in 2 days' time. But these particular clients didn't qualify. Again, because their income was going to be above the threshold. So, of the 1,000 people that were impacted, maybe 950 just reapply, everything's fine. But for these particular clients, they weren't, and they could have been caught in a very precarious position.
So they're basically, the bank's like, there's no spots. You owe us an extra 10% if you want to settle on this property.
Yeah, so you don't have the government scheme now, so you can't settle.
Or the 15%.
Yeah.
They do 5%.
Yeah. So
whatever it was.
It was in a case where they may have needed to find extra funds it could have been really intense. And from as a first home buyer, you would be confused because I've got my formal approval. So how can the bank take that away? But in their fine print, the bank's approval also says subject to this government scheme being approved. And that's happened before with something completely different. We had a case once where it was with a bank that approved a company title in in the eastern suburbs of Sydney, which is pretty common. And then the banks had a formal approval out. These clients are about to settle. And then in their fine print, it did say the bank can change their approvals at any time. And the bank stopped doing company title and actually took away all the approvals in place. And another bank came and saved us at the last minute. And it was actually the same bank that saved the day in this case, which is a big bank that did something. So we went to this big bank and said, this is the predicament. And the bank had already come back to this client and said, no. But we went back and said, well, this is the whole case. We can't get it approved again.
Yeah, so they had a 5% deposit. The government was going to guarantee the 15% or the balance.
Yeah.
But no spots available. If you want to settle next Thursday on the property, you need to come up with an extra 40 grand or something like that, or an extra 15% security.
But these are the things when there's these things that happen, and from the government's perspective, they're like, oh, they just reapply. But there's these little things that fall through the cracks, like people that can't just reapply because they aren't going to be approved again.
Yeah, because if the financial year ticks over, their income, John, would have been higher to get to the scheme.
Yeah. So what are we saying?
Anyway, the shout out, the bank actually did it themselves. So the government wouldn't come to the party and say, no, we're not giving this spot to this client because we ran out of spots. And black and white, no way. They can reapply or they can come up with the other 15%. There may have been some other solutions, but the bank actually have settled this loan for them with a 5% deposit, no mortgage insurance and no government guarantee in place. Which
took the risk to look after their customer.
They just took the risk because at the end of the day, there's a client at the end of it. And, the bank, and if the bank wouldn't have come to the party, we probably would have come to the party, even though it's not the bank's fault and it's probably not our fault, but we still have an obligation to this client, as do the bank. So the bank came to the party without us doing anything, which was great. But I guess we also give that bank an incredible amount of business. And they also know that there's a client at the end and they want to do the right thing by the client. They don't want a client to be caught up because they're, but I think there would have been a number of clients that did get caught in that particular instance.
Yeah, because they would have had to get LMI and maybe they couldn't service with the extra borrowing or no parental guarantee, no other banks or lenders. So it just all goes to show you that having good quality brokers that write high volume, it can be what's good for the geese is good for the gander, because your team...
And I did promise the Commonwealth Bank a big shout out to say thank you for saving me in that case and the client. So thank you, the Commonwealth Bank. That's the second time they've bailed us out for a relationship thing where really it didn't make sense to them, but it made sense for the big relationship. So thank you, Commonwealth Bank.
Well done. When you've got 70% of Australia's lending, then you can probably give the occasional one away, can't you? Shout out.
We'll take that as a comment, John. Look, thanks everyone for listening today. Hope it's been fun. Thanks for dropping in, Rach and John. My name is Glen James. This is
John Pidgeon
and
Rach Kroon.
And you can hear these peeps on the This Is Property podcast. Until next time, bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.